the Russian debt situation. So obviously, a couple of weeks ago, Russia invaded Ukraine. Things have not gone according to anybody's expectations, I think. A lot of folks thought this would be over in a hurry, and things are kind of settling into what looks like somewhat of a stalemate. Since this all started, the world has responded to Russia with some pretty heavy sanctions, and they've also frozen a lot of assets that the government of Russia had denominated in US dollars and euros. Well, for every action, there are subsequent reactions, and one of those is coming to the fore. So as we record this, Russia is at great risk of default on $150 billion in dollar-denominated debt payments that they owe. They presumably do not have access to 150 billion US dollars right now because of all these sanctions. So if they do default on these payments, I saw where this would be the first time since the communist takeover in 1917, the Red Revolution, that something like this happened. So it could be a big deal. It's certainly not something that happens a lot, but the fear, I think, is we don't know what the consequences might be of a Russian debt default. Other national banks, when they purchase assets denominated in foreign currencies or they buy bonds from other companies, those things are typically public records. Those are published for the purposes of transparency so that there's confidence in what the national banks are doing. The issue is not everyone who purchases government issued debt in the form of bonds is a government entity. So when you have private investment companies around the world that are invested in Russian debt, we may not know to what extent they're exposed to that debt. So if, for example, if Saki, you had $5 million invested in various sorts of investments, and your exposure to Russian denominated debt was 0.1%, you're probably not going to lose a lot of sleep tonight. It's not going to be pleasant if they default on the bonds, and you're going to lose a little bit of money, but that's all. It's just a little bit. You may not even notice. If you have $5 million invested and 2 million of it is in Russian bonds, you are going to lose a lot of sleep tonight because if they don't pay, that's going to put a real hurting on your investment portfolio. So that's what's at issue here. We don't know who's invested in this debt and what dominoes might start to fall when, if they fall, if Russia does default on this debt. So, given what we know, what's your read on the situation? What's your take on this?
Well, it's going to be interesting to see it play out because you're right. We don't know what the casualties will be from this if they default. But what we do know is it's going to create volatility somewhere. It's just another topic, another issue that we have coming out. And it seems like every day that goes by here lately, we have another topic that comes out that creates volatility that isn't the best of news. So it's just another reason for the average investor like us and our listeners to make sure they're diversified, find out if they have any exposure to this, and make sure that any money they have in the stock market, they don't need in the near term. Because something like this, and if the event does take place, if they do default, it could be pretty significant. And if it is, you might see a 20% drop or 15% drop in a matter of weeks. Um, and that would affect you if you had short term money in the stock market. So pull that short term money out if you need it. Otherwise, you really don't need to do much if you don't need the money right now because it's going to come back. Better days still lie ahead. So just sit back, let this thing play out, and see how it goes.
Yeah. Well, I agree with all that. I think that's good advice. It makes me think about, again, how important it is that you really have a firm foundation beneath your feet
Yeah.
financially. You know, it there might be room for speculative investing. There might be room for some of this other stuff, but you don't want to get involved in that stuff until you really have a good foundation underneath you, because if you get into a habit of taking too much risk, you get into a situation like you just said. It's like every hour you look at your device, you log into your computer, you check out your phone, whatever, and it's like, oh, well, there's another news story
Yeah.
that is telling me something that I don't really want to hear right now. That's a little disconcerting, but you know what? Volatility means opportunity, so I'm going to go swing for the fences. It's like, okay,
Exactly.
good luck with that.
Yeah.
Um, if you're settled and you got a little bit of play money and you want to do some of that, okay, have fun. Good luck. If you're not settled, you could lose a lot. I mean, you could really lose everything if you're not careful. So you just never know how these things are going to play out, because you have so much uncertainty. It's like, okay, the first domino is going to fall, but we don't know where the fourth domino is. We don't know where the 10th domino is. We don't know what the implications are ultimately until this plays out. So, there's a lot to be concerned about with that. And it's not just on the government debt side, right? You're talking about a national issue with Russia defaulting on a debt obligation. But the markets today are so interconnected,
Yeah.
right? That a private company, or even a publicly traded company, but a non governmental organization, a company, could also have a major impact on financial markets. And that brings us to an update on the Chinese real estate company Evergrande. They're one of the largest, if not the largest, investment companies in real estate development in China. And there have been some red flags flying around them for a while. So it's like, okay, if the Russia story kind of reminded me to look in on that and see
Yeah.
where they are. So uh, that's also a little bit concerning. So uh, the critical timing is going to be the end of March. That's when their annual reports are due. And by that point, their first fully audited statements since the start of the liquidity crisis in China, liquidity crisis in China, their first fully audited reports since the start of that are due to be published. So we're about to find out whether or not this is a big deal, right? Um, but there are some red flags that indicate that it might be a big deal. So the problem with Evergrande is that they could very well be over leveraged. They may have borrowed too much, counting on growth in the real estate market that didn't actually take place. So when the debt comes due, the question is going to be, do they have the assets on hand to pay what's due? And we don't know yet if they do or not. But this to me is very reminiscent of what happened with Bear Stearns and Lehman Brothers back in 2008. There were some cracks in the dam, so to speak. There were some red flags and warning signs. And early on, a lot of folks said, well, that's a bummer for them, but shouldn't have an overwhelmingly negative impact on the market. But all of those unknowns started making themselves known. All the dominoes started falling, and then boom, we're in the financial crisis and the real estate crisis of 08, 09. And it was a catastrophe. So that's a possibility here, not to be a doomsdayer or anything, but I think it's important that folks understand that that's a distinct possibility now, that a crisis is going to manifest itself somewhere in the world in a way that is going to have a dramatic impact on us here at home. So, I just think it's worth everybody paying attention and being ready for that to the extent that you can be.
Yeah, well, I agree 100%. There's a lot of events happening right now, like we keep talking about, and that goes in line with just preparing yourself for the worst. I'm an optimist. I still think our better days lie ahead, and they always will. But there's always bumps in the road. So now is the optimal time to evaluate your positions, reallocate some funds, do whatever you need to do. Evergrande's interesting. It's kind of what we were just talking about in a previous segment. It sounds like they made their financial outlooks on the best case scenario every single time. Well, and for 15 years or 20 years in China, they've done very well with that. Well, for the first time in their life cycle, they're hitting a downturn or a slow period, and the growth is slowing down. And look what's happening. Now they have a liquidity problem. So it's a little ironic. We actually Matt and I didn't intentionally try to tie these segments together, but that actually kind of tie in perfectly, right? Yeah, it kind of goes.
We call bringing it full circle.
Yeah, man, it worked out great. So that is a perfect example of what happens. Yeah, you might be going great for a certain period of time, but you just haven't built yourself from the foundation correctly, so you're set up for failure. And that's the easiest way I know how to say it. Just pay attention to that and try not to emulate that.
The Purposeful Podcast.